If you are connected to a family-owned business, or if you stand to inherit assets from a baby boomer, the Biden tax proposals are coming for you. CNBC is reporting Biden's budget proposal includes old, recycled, and some new things that are taking aim at family-owned businesses and those who stand to inherit assets from baby boomers. Check out the article. This budget, which is necessary, comes at a time when family-owned businesses and Americans are already feeling the vice and the constraints of higher taxes, inflation, hiring pressures, and other adverse business conditions. In the article, experts, they cast doubt and they cast shade on would this even pass in the form that it is. But you should be watching because this could affect you. Let's just talk about the 5 provisions that are in President Biden's budget proposal and how they could affect you. So here we go. Number 1, higher capital gains rates. Biden's proposal would push top rates up to almost 45%. Under the current laws, you would pay capital gains rates depending on what your normal income is taxed at. So it could be as low as 0% and it could be as high as 20%. But under this provision, if you're someone making good money, that capital gains rate could be taxed at as high of 45%. That is monumental. Just think for a second, would that affect the stock market? I mean, the whole premise of capital gains is this. Laws are written for reasons. It's either to drive behavior or to raise revenue for the government. So you have to think about a tax law or proposed tax law and what are they trying to do? Well, the original tax law that this would be updating and replacing, the premise was it wanted to get assets into the market. It was trying to encourage Americans to invest because if you make a profit and you sell, you get a lower tax rate. That is the motivation in the law. So what does jacking the capital gains rates up do for Americans and for family-owned businesses? Number 2, Biden is talking about, and he's been talking about during the whole campaign and through his election, getting rid of stepped up basis rules. But here's what it means. If your parents bought some investments, here again, maybe stocks, and they bought it at a low price, if it goes to a high price, when they die, if those stocks get passed on to you and you sell them, remember, you're inheriting them at a high price and you could sell them that very day and pay 0 tax. It's a blessing. It's a gift for next generations. But if we change the rules, what would happen is if you inherited that stock at a high price, you would have to pay tax on the profit. That is monumental. It's huge. It's crazy. It drives behavior. And maybe people will not want to be in the stock market or in real estate as a result. That's my concern as a tax professional.